expand on, because as an underwriter or a mortgage underwriter, which I have been in the past approving those loans, like we look at not just your credit, we look at your income, like he stated, your debt to income. We also look at your assets, how much of a down payment are you putting down versus the value. So let's say if you have a house that's 100,000, you're putting 10% down, which is 10,000. Like we look at that. We also look at your, like I said, your assets. So like, do you have money tucked away for a rainy day fund for the mortgages? How much of the mortgage payments do you have? How much money do you have at the end of the month? There's a lot that goes into you. So I do give them kudos for that, but follow me for more credit tips and advice. Let's go.
How to get a $50,000 personal loan with low income and bad credit. Save and share. It's going to be through a company called Achieve at achieve.com/personal loans. With Achieve, you can pre-qualify with no impact to your credit score. As far as your credit score is concerned, you're going to need a minimum of a 620 FICO score. As far as documentation, you'll need proof of identity, social security number, employment status, and proof of income. If you're self-employed, you can use a company like ADP to create your own pay stubs. Oh, and they will be pulling your Experian FICO 8. If you want to learn
he didn't give you the requirements for 620, but I will. So if you're at a 620 credit score, either you'll fall into a couple of categories. Either you'll be brand new to credit, which you don't really have a lot of credit history, or you have bad credit. If it's the first one, that you are new to credit, you better make sure that you are paying all your loans on time, really low credit utilization, and your debt to income is not really high. When I'm a person that approves loans, and I approve specifically credit cards right now, and I'm like, if I see that, I'm not going to give somebody a American Express with a high limit when they're not even paying on that, because that's what an authorized user does. That shows that, oh, you're just on the card, you can use it if they allow it, but you do not make the payments, which is the reason why we as underwriters, loan underwriters, don't hold that a lot of weight when we're reviewing a credit application due to that. So that's good that her score is there, but now she needs to establish her own type of loans for us to be able to see how she's going to go ahead and pay. And then also that's going to help her build her credit, because now she has actually something reporting other than something that's as an authorized user that helped her get on their credit card. So yes, so that's what I would do. Get a secured credit card, or just a regular credit card. If you can get an installment loan, those are a lot. Gonna build your credit score to 700, and you currently have late payments are already that have been reported, collections, charged off loans that are about to go to collections and currently late. First thing you gotta do is get current on your loans. You have to hold on to the loans that are reporting on your credit report, because you need credit to reflect positive payment history, because 35% of your credit score is based off your payment history, because now no lenders is going to want to give you a loan because they see you have all this bad credit within a short amount of time. So you got to start now building that back up. If you know someone that has excellent credit, and then get you in as an authorized user, that will be a tremendous help. Helps inflate and boost your score. And then I would eventually get to the collections if it's a lot, because those are going to continue affecting you in being able to get. Here's a little bit of credit myths that you may have not known about your credit. So the first one is that divorce does not impact credit score. A divorce does impact a credit score, because if you have joint loans, or maybe, you're having your money go to your lawyer and you can't pay your loans, it's going to start directly affecting your loans, because if you're not making them on time or no one's paying them, that's going to go ahead and shoot down your credit score really fast. The next one is education level can affect a person's credit score. I would say an education can affect someone's credit score, because if you're not knowledgeable, and that's why you have someone like me that's here to go ahead and help you, is very important. And it's not talking about having like a degree or anything, but just being educated on credit. And if you're new, welcome to my page. I will help you get there and get educated. And the last one is that all lenders use one